Time now to take a look at the home builders for our 360 round ahead of Toll Brothers, which reports its earnings after the bell today. And we have a preview. We'll start here with Alexis Browne, COO, Portfolio Manager, Alexis Investment Partners. Great to see you. Thanks for being with us. For the most part, I'm getting the feeling most people are still pretty optimistic when it comes to home builders and housing, and that they have some pricing power. In your case, you think that, as I was reading through your notes, the best way is to get in and invest through ETFs. Is that how you would invest? Tell us more about it, Alexis.
Yeah, hi Nicole. Thanks so much for having me back. It's great to see you as well. So Toll Brothers and home builders in general, we see as really an area of strength in a market that's pretty strong as well. And so we do see it as having both a good fundamental and a technical story, but playing that more diversified ETF play, as you said, just makes it so that we can participate in that industry strength without having to worry about, say, a single stock kind of stubbing its toe along the way. And we do see the industry as having a strong hold within an otherwise diversified portfolio, even outside of home builders.
So explain some of the ETFs, because I know you were looking at Toll Brothers being more of the luxury play. Explain some of the ETFs that you would say might be a good investment now. Are you recommending them, or you tell me?
So obviously we can't give any recommendations because that depends upon a single person's portfolio and where they are in life. But what we chose to do within our portfolios is to invest in XHB and ITB, which are two more diversified home builders ETFs. And if you look at a chart over the trailing 1 year, you'll actually see that XHB, ITB, and Toll all have a pretty good chart pattern and a clear uptrend and end up in pretty much the same place. Just the ETFs do that with slightly less volatility, which we see as encouraging.
Yeah, and you know what else was encouraging is I was reading through CFRA, Ken Leon sent us his note too, and he was talking about the pricing power that Toll Brothers had high demand for luxury and near luxury homes. I would imagine that a lot of these home builders must have some pricing power that they could raise their prices if the demand seems strong.
Yeah, well, demand has been very strong for home builders, and there's a lot of tailwinds for the industry. And for example, there's really strong demand with low supply, and there's good trends demographically with millennials entering an age where they're starting to have families settle down. So you see more appetite for homes there. There's also really good access to credit with Fannie Mae and Freddie Mac supporting that by increasing their conforming loan limits for 2022 to almost $1 million in some markets. And the buyers in general just have pretty strong balance sheets, pretty strong credit scores. So that means that demand is continuing to be high. Supply is a little bit more constrained, which is good for the home builders. And they've been able to pass along, say, some rising building costs, which may be a concern for some people, over to the consumers. So it'll be interesting to see if they can continue to do that. But we don't see any reason why they couldn't, especially with consumers not only having strong demand, but having that ability and that access to credit so that they can not only want to buy a new home, but afford to.
And the low interest rate environment that you mentioned, Alexis, even with, a rate hike or two, it still would be near record lows.
Oh yeah, and that is a tremendous tailwind for the industry in general. Actually, it was very interesting to see that interest rates dipped a little bit at the last Fed announcement. We don't expect interest rates to continue dipping. We do expect it to rise, but very gradually, and not something that would necessarily deter new home buyers or really affect mortgage rates very much. And actually, we do see it as encouraging that if interest rates were to rise, the reason would be because the economy is so strong and the Fed's just acknowledging both inflation, which would be more of a headwind to this industry than rising interest rates would, and that the economy is doing so well.
Right. And so for the most part, we're thinking more up and away than we are thinking recession or worries or sell-off when it comes to some of these home builders. Is there anything that you're very worried about? I mean, if there were a downturn of some sort, you mentioned supply chain, but while it's slow, it's still working.
Yeah, I mean, there's always concerns to any industry. like for home builders in particular, some people may be concerned about the idea of rising interest rates, inflation pressures, supply chain constraints. But as you pointed out earlier, Toll Brothers and home builders in general have been able to pass it along to the consumer. And in general, we do kind of see this market going up stronger, and home builders in particular have been a bright spot. Even last week, amid some general market volatility, you saw home builders maintain strength, and we see that as very encouraging. But again, we do see the market in general as being strong. And so we have a very diversified portfolio, and we believe that the most important part of investing in the stock market right now is just investing in the stock market and participating in this future growth.
Alexis, thank you very much. We'll be watching for those Toll Brothers numbers. Thank you so much. Alexis Browne, Alexis Investment
Thank you so much.
Partners.
Happy holidays.
Thanks for being with us. You too. Thank you. Thanks for being on the show.